we are moving on to what some consider one of the stronger plays in this industry. So I'm super excited to bring over the CEO of Fire and Flower, Trevor Fincott. How are you, sir?
Well, thanks for having me, Elliot.
Of course, Trevor. Absolutely thrilled to have you guys here. As I said, incredibly strong company. FFLWF, if you don't know their ticker, it's right at the bottom of the screen. Trevor, with that, my friend, I'm going to turn it over to you.
Perfect. Okay, well, here on, I'll do a little quick walkthrough of our deck. I really want to open it up for questions if that's possible, because that's really, I think, important to understand our story. Just a very quick bio about myself. I was an early cannabis pioneer in the Canadian market, 2012, co-founded Metrum Health Corp. We were taken out by Canopy in 2017 for $430 million. Then pivoted, started a new company, Fire and Flower, realizing that retail is the biggest part of the value chain. Ultimately, when there are not brands, and there are not arguably brands yet, there will be. Being in retail is the place to be, but being a tech-forward retailer was key. So I'll talk a bit about our story. It really has sort of three elements. We are a tech-forward retailer of cannabis. We started with the end goal in mind, knowing it's going to be very competitive. We started with how to build a best-of-breed competitive retailer and then put it in the cannabis space, not the opposite. We've executed on our plan. Very good traction to date. We have 86 corporate-owned stores in the Canadian market. We are with 2 quarters of positive operating EBITDA, so we've turned the corner on that, which is great. And we have a very strong strategic partner in Circle K. So without further ado, we'll go through the disclaimer and forward-looking statements on our deck. You can download this from our website. But really, if you think about us, our value proposition are 3 things. So we started with this tech-forward position. We knew that in retail was going to be competitive. When there's money on the table, competition is going to be fierce. So we looked at, Amazon as the big gorilla in the retail space that was massacring Main Street retail. Look, who is competing with them? Is anyone competing with them? And we found a few groups, things like Beta out of California, Warby Parker for glasses. There's a number of groups that were not only competing with Amazon, but were thriving in that environment. And so we decided, because again, we started the company from scratch, to take those lessons learned and build the company in that way, build with the end in mind. So those companies all had a few things in common. They all viewed themselves as tech native. They were not bricks and mortar stores that then kind of bolted on a digital strategy or then tried to figure out e-commerce. They started native to the digital space. And so that's what we did. The first acquisition we made actually was a tech company called HighFire, which has become an important part of our platform. We believe it's a clear differentiator. No other group started with a group of 25 data scientists and computer engineers. It was an anomaly at the time, but we think it's paying dividends for us. So these best-of-breed companies that we tried to model, they use their tech to drive very deep engagement with their customers. And in turn, that engagement led to bigger lifetime value, which is bigger basket sizes, more frequent visits, all these kind of normal metrics of a retailer. But we look at it as lifetime value of a customer. And that comes from my tech background. But that's how we look at our customers. And then these companies that are super competitive, they take this information and this relationship and they view their vendors as partners and customers. And that's different than Amazon, where Amazon vendors don't love Amazon. It's a necessary evil. We thought, well, look, if you look at the best of breed in retail, they're actually partnering with their vendors. And they're helping them with this data and analytics and helping them make better products for their customers, helping them make better pricing decisions, better product offerings, helping that retailer, being us in this case, to drive greater loyalty, greater service offerings, more product diversity, all those things that drive a great retailer. Having these 2 revenue streams is really important to winning in retail when it gets very competitive. And right now, arguably, it's not that competitive. A lot of the states in the US are still sort of limited license states, things like Illinois, but where things are really competitive, they will all end up as competitive markets. And we've seen that in Canada. One of the things I like to talk about is, Canada is the red ocean of retail in the sense that we are the most competitive market on the planet. In Alberta, where we have a lot of our stores, it is 1 dispensary per 8,000 people. That is similar to Colorado and Oregon in the US. But in addition, we have to compete with our own regulator. So that is, if we can do that and post 2 quarters of positive operating EBITDA, we're doing something right. And that is all to do with our tech platform. So we have this proprietary tech platform. It's not just one thing, and I'll talk about that a little bit later in the deck. It's not simply e-commerce or simply a loyalty program or simply digital engagement in store. It's a lot of these different things. But what we know is it drives transact. Typically, they're worth about 45% more than a non-engaged customer. If we can keep them in our ecosystem, in our store, and do things like recommendation engine, sort of iPad detailing, understanding who that customer is, we can get it up to about 65% more lifetime value on average. And if we can complete that journey with something like a delivery option, it goes up to 85, 90%, 5% higher lifetime value. And this is what next gen retailers already knew. So we didn't invent this, but we looked at best of breed and we built it for cannabis, and it's proprietary to us. So for us, that also obviously helps our stores perform better, but it also helps us when we acquire things. And so we view ourselves as an aggregator in the space. As I said, we have 86 stores in our Canadian corporate-owned portfolio. We are aggressively expanding. We are aggressively expanding into U.S. markets now through our strategic relationship with American Acres. And our first store there that they've acquired, we've empowered them with all of our tech, all of our digital platform. That store will be a Fire & Flower brand store, and it's currently, the first one is in Palm Springs. We're very excited about that transitioning into the Fire & Flower banner network as our kind of flagship beachhead in the US market. And we look forward to using our tech platform, our competitive advantage, to go and aggregate and roll up mom and pops and add them to our portfolio. Because we know that if we take our demonstrably proven model and our tech platform operating systems and apply them to mom and pops, we can make those mom and pops more valuable, and we're going to roll them up. So, that's a little bit about our platform. I'll return to that a little bit as well. In terms of execution, again, 86 stores. We are the largest retailer up in Canada. But along the way, as we built the company, we were also very fortunate to attract the attention of Alimentation Couche-Tard, which is the parent company of Circle K. And that is a $48 billion market cap retailer. It's one of the largest retailers in the world with 16,000 stores in 25 countries. And we are their growth engine in the cannabis space. So for them, we are the cannabis growth engine, but we're also the tech and innovation engine because, again, with our early acquisition of HighFire, we have had dedicated R&D resources that continue to sort of innovate our service offerings and additional revenue streams. So they're excited by that, and we're excited to have them as a strategic investor. We also operationalize our relationship, and there's some things I'll touch on when we get to that part of the deck. So we've got a strong balance sheet. We're fully cashed up. We have a lot of growth capital to execute on our plan, and as I said, we have a strong strategic partner. So we feel that where we're at the moment is we are part of, I would say, a lot of different stories in Canada at the moment. Not all of them are good stories, and so we're delighted to be able to have this opportunity to talk about it ourselves. Because at I think the consensus estimates, we're trading at roughly 1.4 times this year's sales and consensus. So you can see that we're we believe that we're significantly undervalued in that sense. So a good opportunity for investors to take a look. Aggressive growth plan, we've already talked about this. We have a couple of operating units so that it is important to understand. So we not only do retail, we also have a wholesale business unit, and that drives a lot of our growth as well. So for example, in smaller markets like Saskatchewan, which is a 1.3 million person market in Canada, we also are able to do wholesaling, and that also adds to our bottom line. But it also allows us to do things like have exclusive product offerings, white label and control brand programs. We can do e-commerce to consumer there. So really, this somewhat smaller market in Canada really was our template for how we will expand to the rest of the world. So in that market, again, we do full retail, we do delivery, we do control brands, we buy directly from licensed producers so we can control those costs and take advantage of asymmetrical price compression on the production side. And if you look at where we find attractive in the US, we like Oregon, we like Colorado. Those are places that are already competitive, and we know that we can compete and make those businesses better if we can bring them into our system. California we like as well, which is why our beachhead is going to be in Palm Springs there. But California, arguably, though, isn't competitive yet. It's got 700 licenses. It can grow to much larger volumes there. But I think for us, looking at mature markets with revenue-generating, cash-flowing businesses that we take our system in and make them better is going to be important. Another important thing about our operations is that we are multi-banner. And I think that this is an important part of our strategy, because what we realized, being data-driven, we started with Fire and Flower. We launched a lot of different stores and realized that our data tells us there's about 50 types of cannabis consumers, and about 8 to 10 of them are the ones that everyone is going after. In this sense, we realized that our brand only resonated with 4 of them. And with marketing, we could probably get to a 5th demographic. But cannabis is really a very democratic substance. It is consumed by all walks of life, every part of the socioeconomic spectrum. So it was sort of unrealistic to expect any one brand to appeal to everyone. There is no one size fits all for cannabis. And so we branched out and expanded ourselves to multiple banners. So we have Friendly Stranger, we have Fire and Flower, which is our mass premium brand. We have Happy Days, which is our value conscious brand. And we're going to continue in this multi-banner operational system because, again, there are no one-size-fits-all answers in cannabis, in our view. Talked about open fields. Again, U.S. market entry through American Acres. This is all on our deck, and I encourage people to download it. We update it periodically. But this is really us providing a strategic advantage to a U.S. sort of satellite of ours so they could start operating. We are not plant touching. Congruent with our Toronto Stock Exchange main board listing and our aspirations to we're on the NASDAQ track. We're not plant touching, but what we have is a proxy, American Acres, who we provided our IP in return for the right to purchase at a deep discount when we are allowed to. And in that interim, they're going to go out and acquire mom and pops, and we're going to make them into Fire and Flower branded stores and bolt our digital platform on top of it where we can extract regulatorily compliant revenue. All right, so I talked about HighFire. I think it is worth understanding that HighFire, again, is not a third-party piece of software. We believe that is not the correct strategy. We invested early in technology because in Canada it was federally legal. That was the right move there. In the US and the MSOs, the business model really was get a license, preferably get a license in a protected market, like an oligopoly, and then extract value from that. But there really hasn't been a significant amount of infrastructure building because that wasn't the business model. But we knew that the end state of all retail is tech enabled. If you look at even like Walmart, Kroger's, things like Target, they all have huge digital platforms driving them. They view themselves as ad networks. All of those things here, if you look at sort of our tech stack here, it's not one product, it's 4 products. We have our HighFire IQ, which provides us independent data revenue, data analytics revenue, 100% gross margin. We did 6.3 million of that revenue in 2020, and that is continuing to be a source of growth for us. That's data and analytics. That's what people think about there. But what's interesting there is our insights are not simply point of sale insights. We are twinned with COVA, point of sale system. We have a data agreement with BDSA in the US. It actually maps to our Spark Perks loyalty program. If you look at that, the second part of our stack there, that's our customer engagement program. So it's not knowing just what's sold. That's not useful business intelligence. We know who it was sold to, what type of consumer it was sold to, so we can actually get more meaningful insights there. Things like our retail and wholesale operations as well with HighFire One. This is things like e-commerce, delivery, in-store, signage and advertising. And HighFire Reach is our ability to get outside the cannabis consumer sphere and aggregate more consumers into it. So HighFire Reach, our internal sort of ad network, is very similar to what Kroger's, Walmart, and Target have all built. And if you go to their website, you can see they view store as media. This was always our goal, and that's what we've executed on. So again, we're very far ahead of the curve in terms of the infrastructure required to win. And we're starting to see that play out now. As I said, second quarter of positive operating EBITDA under our belt, and more to come. So we've talked about HighFire platform, again, our database and analytics package, and the various products that we have here. I think an important kind of maybe final note on that is to think about HighFire is, again, dedicated computer scientists and data, and computer engineers and data scientists that are constantly innovating, constantly. So we get comments sometimes. People ask me about our SG&A, and my point is, what other company do you know that has a dedicated subsidiary to technical R&D? And listen, if people don't believe that that's a competitive advantage, that tech somehow doesn't matter, that's one way to look at it. Our view is strongly that innovation is going to be the key to retail success, and having that constant. We're creating these products constantly to find new revenue streams. HighFire IQ we launched more than a year ago. Things like our HighFire Reach advertising platform we only launched 2 quarters ago. So expect more innovation, more dedicated digital product research and commercialization from us, because that's our DNA. Our Spark Perk members program, I think we're approaching 300,000 now. I think we publicly talked about 250,000, but that continues to grow. Again, they're very, 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 very valuable customers to us. And the last sort of piece here, I know we're running out of time, and I do want to answer questions, is talking about our strategic relationship with Circle K and their parent company. Currently, they have 19.9% equity stake in the company, and they have an ability to increase their ownership through warrant structure, which brings in new growth capital for us. So far, I believe it's about 75 million they've invested in the company. If you look at the other tranches of warrants, it brings in about 300 million of growth capital over the next sort of 30 months to help us get there and expand. And that's sort of the financial side of it. I think more importantly is looking at how our operational relationship continues to evolve. So just quickly then, if you look at our operational intertwinement, we've started a pilot program in 2 of our 2 Circle K stores. We actually have co-located smaller footprint, 500-600 square foot Fire and Flower sort of express and select stores in there. So that's an example of our strategic partner using their existing real estate footprint to monetize it in more effective ways. And if you look at how we can expand that to other markets, it's kind of a no-brainer, but it requires some thought. The other thing is, for example, even outside the cannabis sphere, Circle K currently carries Fire and Flower gift cards in 300 locations outside of the cannabis industry. So it's an example of how we're working together already. We have a shared services real estate agreement with Circle K, where we utilize their real estate infrastructure to find good locations. You can't sort of beat. You should align yourself with partners who really know what they're doing in terms of real estate, and undeniably they do. And I'd say look for more of these kinds of catalysts in our relationship going forward. So I think that's all the time I have for the deck flip. I'll leave it at that, and I believe open it up for some questions.
Awesome, Trevor. Appreciate that, man. Super, super interesting insights there. Do you have a couple questions that have come into the chat? I have 1 or 2 as well. You mentioned you're not plant touching, but you are, in a way, you have a satellite company, I believe was the word you used, a satellite subsidiary. That is. And then sorry, do you want to say something to that?
Well, yeah, it's not a subsidiary, right? It's a third-party company. We have a strategic relationship with them in that we've licensed them all of our IP, our HighFire platform. In a sense, we weaponize them with the best of breed. In return, we have the right to acquire them at FMV at a deep discount when legal. So we're working with them, but we don't own them yet, and that's important for the nonprofit.
I like that. Weaponize them. That's a good one. That's a good one, Trevor. All right. Do you have a slide on your income statement? Is that in your deck?
It should be. I think we have. If not, it's on the website. So yeah, that kind of financial information should be available.
Cool. You can reach it fireandflower.com. Awesome. I have a question, if you don't mind. On your recent earnings, you mentioned you were working on a potential NASDAQ uplisting. I'm curious if you're able to give us any insights, timeline into that.
Yeah, no, absolutely. So we have, we continue to make progress on that. We obviously want it to happen as fast as possible. We're in our we're in the rounds of answering questions. So really it is in NASDAQ's court. I think it's measured in months, not quarters. That's probably the only guidance I can provide on that one. And I would say the most important indicator is next week we have our annual general meeting. in which the key resolution being voted on is the ability to do the share consolidation that would be required for a NASDAQ listing. So that's the kind of a measurable. Next week, we will have all the structural things we need to complete that. And then it's over to NASDAQ and just making sure we answer the questions on things like American Acres and making sure we're not plant touching. So.
Fantastic. Trevor, I've always loved Fire and Flower. I know I read an article earlier this year saying you were one of the 5 stocks to buy in a crash in the cannabis industry. And I think we all just heard why. So with that, Trevor, if you have any last thoughts, you can put into like 10 seconds. I'll let you go. Other than that, thank you so much for being here.
Well, thank you. Listen, I think we're, again, I would look at people to keep watching our story. Stay tuned to the news that's coming out. We're going to continue to execute on our plan. And I think we're probably the most attractively valued of all of our competitors in the space. So I'll leave you with that thought.
I love it, Trevor. Thanks again, my friend. I appreciate you being here with us. Be well.
Thanks, Elliot. Bye-bye.
All right. Awesome. That was Fire and Flower FFLWF on the OTC. We did get a little bit of insight into a potential NASDAQ uplisting in months, not quarters. Love that company. They are making huge moves and they are backing it up with a solid grounding of technology. And they're weaponizing. I love that. Weaponizing. We're moving right along, though. So that was an awesome presentation from Trevor.